Bitcoin is currently trading around $109,000, stabilizing in the $105,000, $110,000 range after setting new all-time highs earlier this year. Despite some sideways movement, Bitcoin remains strong, supported by institutional demand, geopolitical uncertainty, and government engagement. Notably, the U.S. Strategic Bitcoin Reserve now holds 200,000 BTC, signaling serious governmental interest. Analysts are confident Bitcoin will continue its climb, with projections aiming as high as $150,000 by early 2026. The momentum is being driven by increased ETF access, clearer regulations, and adoption from both institutional investors and retail traders. Ethereum is trading around $2,600, riding a wave of optimism ahead of future network upgrades. The recent ETF inflows and growing investor confidence in Ethereum's long-term viability have some analysts predicting prices between $7,000 and $10,000 within the next 12 months. Solana just launched its first US-listed ETF, SSK, further cementing its place in mainstream finance. XRP, Dogecoin, ADA and Litecoin are awaiting ETF approvals, which could significantly boost their visibility and market demand. ERC-20 tokens like Chainlink, Shiba Inu, Uniswap and Polygon are gaining traction as Ethereum strengthens. Mid-cap gems like Litecoin, Filecoin, Cosmos and Aave are being spotlighted as high-upside opportunities during this cycle. A major altcoin rally, often referred to as alt season, is expected if Bitcoin's market dominance drops below 54%, which traders are actively monitoring. Legislation and regulation. Shaping the market crypto legislation is finally moving forward in a meaningful way in the US, removing much of the uncertainty that's historically weighed on the market. Key developments include the Genius Act, stablecoin bill, passed the Senate with bipartisan support. It introduces reserve, audit, and licensing requirements for stablecoin issuers. The Clarity Act and FIT. 21 Act offer frameworks that clearly define whether tokens fall under SEC or CFTC oversight, bringing long-needed regulatory clarity. The SEC has begun to publicly distinguish between securities and non-securities in crypto, offering a more favorable stance toward coins like Bitcoin and stablecoins. Ripple and Circle have both applied for U.S. banking charters, a move that could make crypto services more accessible and regulated like traditional finance. On a consumer level, the FHFA is exploring allowing compliant crypto holdings to count toward mortgage applications, an unprecedented integration of digital assets into traditional finance. At the federal level, President Trump has banned the development of a U.S. CBDC, central bank digital currency, while encouraging broader crypto adoption through executive orders supporting infrastructure and reserves. Are we in a bull run? Yes. By most indicators, we're in the early to mid stage of a crypto bull run. What's fueling it? Bitcoin breaking new ground and holding strong Ethereum upgrades and ETF inflows, strong altcoin momentum and incoming ETFs regulatory clarity, reducing investor hesitation, government participation and institutional interest at an all-time high. Predictions vary, but most analysts agree the bull run could extend well into late 2025 or early 2026, with total crypto market cap potentially reaching $8 to $14 trillion if momentum holds. Final takeaway: crypto is no longer the Wild West. It's becoming a structured, regulated, and widely integrated financial ecosystem. Bitcoin remains the anchor, altcoins are surging with real-world applications and institutional support, and legislation is finally clearing the fog that's long shadowed crypto investing. If you're in the market, this is a pivotal time. While risks remain, especially around ETF approvals and possible SEC actions, the foundation for long-term growth is stronger than ever. The bull run is alive. The question now is, how far will it go?